Hey traders and investors, it's George Berger here. I just posted this chart that measures gold, or sorry, oil, I should say, versus the dollar. So you have the price of oil, of course, going down versus the dollar. The ETFs here are USO for the oil, representing oil, and of course the UUP ETF representing a dollar. I just posted this on Twitter, and it kind of just went viral. So I figured, oh, yeah, let's make today's video on this relationship. This is no rocket science. This is just a pure fact. When most of the time, when you have bigger moves in commodities, or longer lasting moves, I should say, as we've had in oil, there usually is an inverse move happening in the dollar. So from that point of view, one of the most important things I can tell you to watch for if you're looking to trade any sort of, looking for a balance. A lot of people keep looking for bounces in oil, me including. So really, watch the dollar, watch the dollar, watch the dollar, because if the dollar starts coming off a little bit, I think the chances of an oil rally, an oversold bounce at least, will certainly increase. So if we now go back and look at this USO ETF, again, this is the United States Oil Fund ETF. It's very simple for most folks to look at that instead of having to pull up the futures contract. Gives you a bit of an idea of the cascading nature of the sell-off that we've seen in the price of oil. So now we go and look at the UUP. This is the ETF resembling the US dollar index. Peel back the chart a little bit, and you see through this lens, and let's make this a plain white chart. I'm going to make it a weekly chart, and you'll see that the rally has been very, very sharp. But the dollar, when it moves like this, it can last quite a bit. However, just looking back to the past few years, you see that every time we did have these rallies, there was a sharp move to the downside at some point following that pretty soon. Now, I think structurally the dollar here is ready to make a much more important move through a multi-year lens. However, from a near-term perspective, it increasingly looks as if the dollar is getting to be overbought. So if we look at something like the relative strength index, it's in serious. I'm sorry, this is the rate of change. One second. Here it is, the relative strength index, the RSI in blue, and you can see we are in serious overbought territory. Now, the thing with oscillators like this is they can do that they can remain in overbought level territories for a long, long time. In fact, the RSI arguably has been overbought since about August. So that's not really the only thing to look at. But what you want to start looking for is for sort of divergences between the price action and the RSI. And so far, we're starting to see a little bit more weakness here in the RSI versus price that continues to go higher. Now, if we now zoom in a little bit more, we make this a daily chart. Okay, I'm just going to take a very basic setup that I use for most of my daily charts. You can start to see that the moves have become a little bit more sort of spotty over the past few years, past few days. And actually, right now, as I'm recording this, we're seeing a bit of an engulfing bearish candle. So if you want to have a better chance at getting a bounce in gold right, in oil right, or the oil related stocks, you really need to watch the dollar, and you can quite frankly do so just as well with the UUP. So that's what I wanted to go through today. Hope this makes sense, guys. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Otherwise, you can go to thesteadytrader.com and sign up for the daily trade alert service, which is going very well. Take care.